Hello everyone and welcome to Day Trader S&P 500. Today is March 31, 2021. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked stock market newsletters. I want to let you guys know that we do offer a subscription service, been around since 1997, annual subscription for Fibonacci 233 a year, monthly 144 a month. It does daily reports. I put out daily reports. By the way, the last 2 or 3 days, going back to the end of last week, we put out several a day. Same with the annual, with the monthly, we had interim reports. A lot of important things going on. We want to keep everybody informed to what is going on. Okay, and before I forget, even though you haven't seen the video yet, I appreciate all you guys subscribing to the newsletter. Don't forget to hit the reminder bell and, of course, the like button at the bottom. It's there, I promise. Okay, we're going to get into the S&P, gold, NASDAQ, interest rates or bonds, and Tesla today. Very important day today because, as you longtime subscribers know, we've been looking at 39.96 for quite some time. It's been our ideal Fibonacci long-standing target. We did get fooled a couple times here, once in January and once in February. We thought it hit a little bit short, but today the S&P hit a high of 3994.41, within 1.59 points of perfection. That should hold. It could go up there again, and we do have an alternate account that goes to 4136. But for all intents and purposes, this move from the March 2020 lows to today's high is a completed 5-wave pattern. You see wave 1 up here, wave 2 down here, wave 3, a flat 4, and then a 1, 2, 3, 4, 5 within the 5th wave. So our retracements for that 5-wave advance, a 382 is 3305. A 50% retracement is 3092. And a Fibonacci 618 retracement is 2879. We expect the market to retrace at least this most recent 5-wave rise at a minimum. We'll watch this as it declines to see if it's going to retrace something more. But for now, that's what we're looking at. And I'll show you guys real quick here. There is that completed 5-wave pattern from the March 23rd, 2020 low. You see our dates and our waves there. It was an 82% rise, or 1,803 points. And there's our downside retracement targets, 3305, 3092, and 2879. That's a fifth of fifth wave at a minimum. We don't have the internal wave counts from that most recent, I think it was the March 4 low. Okay, so there we are with that. Let me see, do I have that alternate count there? There we go, where 4136, if it decides to break through the ideal Fibonacci target of 3996, which it came within a 1.5 of. Okay, so important day today. We'll see what happens from here going out. Remember, it's a short trading week. There is only one more day left in the trading week, Good Friday holiday. So it'll be a 3-day weekend before they start trading again on Monday. Quick update on gold. You can see our target where C equals A is 1644. The market is getting closer. Again, this is a corrective wave pattern. It does not look impulsive, meaning once this is complete, we expect the all-time high in gold of August 7th of 2075 to be taken out. But our first target ideally is 1644, and if C decides to make a 1.618 multiple of A, we're looking at 1448. There's our targets there, and we're pretty close. So we expect that to hit soon and then reverse. Again, we'll watch the market when it gets around the 1644 if it's going to bounce up or continue down to the 1448 target. That's it on gold. The NASDAQ appears to have topped on February 16th. Again, the indexes don't have to all top at the same time. Historically, they don't. Again, in 2000, the Dow topped in January. The S&P and NASDAQ topped in March. And in 2008, when the tops were in, or was it 7? One of them was in October. The others were in November. So we see a clear 5 waves down here from the February 16th high down to this March 5th low. A correction up. Let's get a Fibonacci retracement here and see what that did retrace. And we are right there. And it's just, again, just past the 618. Let me throw the 786 in there just to see if it went in there or not. There's our 786. Well, it's in between the 618 and the 786. Typical. Shake out the shorts before you take it down. Obviously, we need to see a move below this low here of 12,397 to confirm wave 3 down is in play. Okay, that's a pretty good retracement, so we would expect wave 2 up to be complete there. And our wave 3 targets, 3 equals 1 at 11,845 in the NASDAQ, and the 1618 is 10,739. Okay, we're moving right along here. Let me flip over to Tesla if we can. I want to show you guys an alternate count here. Tesla topped at 900 on January 25, a clear 5 waves down. You can see 1 down, 2 up, 3 down, 4 up, 5 down. An ABC correction right on the 50% retracement, which was 720. I believe that high was 719, 717. Yeah, and the Fibonacci was 719. All right, and then we've got all this stuff. In red, I have an alternate count where this is 1 down. That's still the same. This move up is A. This move down is B. And then C gains equality with A right around the 618 retracement, which is 762. And C equals A at 769. We're going to have to watch this wave pattern here. It looks really choppy, and this looks almost impulsive. So we're going to keep an eye on Tesla here. Obviously, a break of this 717 high means we're probably going to 762 to 769. Otherwise, we need to see a break of this low here, which is 591. Once that's taken out, we're going to take out that what is that low? Was it again? Let me see here. 539 low. And then do I even have where? I don't have that in there. Let me get that in there. Let me take this out for you guys so there's not too many lines. Okay, and we'll get, I remember it was 300 and something. But let's see here. Okay, this will be there. That'll be the bottom of 1. I think that's pretty close. That'll be the top of 2. And this might be off by a point or 2, but I got 356 and then 131 for the 1-to-1 ratio and 1.618. 3 equals 1 at 356. 3 equals 1.618 at 131. Of course, if this alternate count where A, B, C, wave 2 isn't done yet, those wave 3 targets will change if this goes higher. But I wanted to make you guys aware of that. This is ideal, but I don't like the way this looks. It doesn't look impulsive, and if it's a third wave, it should start accelerating. Maybe it will. We'll see what happens. Okay, let's get into interest rates. Okay, this is the 30-year Treasury bond yield. There's the all-time high in 1981 at over 15%. And here is the low down here in March of last year, and I believe it was 0.8%, 0.84. And you can see how the market has just shot off of here. So you can see that obviously it's met a target, and we've had a change of direction here. This is a huge decline. let me get the percentage decline on that from high to low, and it is only 95%. Let me get it right on it. There we go. 94.5% decline. Even if you think that interest rates are going negative, and it got really close, you got to acknowledge that this is a turning point and it should retrace some of this. So let's just take this off here and let's look at Fibonacci retracements. Let's just play the game that, okay, it's going negative, but this is a completed pattern and this needs to be corrected. And there we go. And you can see our 382 gives us an interest rate of 6.41%. 50% is 8.13%. 618 is 9.86%. Can you imagine interest rates at that level? But what we would need to see is a move up and a move down to below 0.84, 0.83, whatever that is. But we believe that this 39-year bear market ended and rates are going up. In fact, I want to look at this more on an hourly. Bear with me here. Okay, while I stretch this thing out, get this up here from the March lows. We're going to move this out. Remove. Thank you. Let's go back to the March 20 lows and look at that pattern and see what it looks like on an hourly basis. We got a little too high up there. There's August. There's the March lows. You can see a 1, 2, and that could be all of 3. I think I may have that too in a photo for you guys, or a pic, should I say, a JPEG. Okay, and there would be 2 right there. And you can see it's already gone past the 1.618 for 3 up here. And so interest rates are going up, and they're going up at a rapid pace, which is the problem. It's not the interest rate itself, it's the rate of acceleration of increase in interest rates. I may have that here. Let me look at bonds here. Here you can see the price. That's the opposite. Price is opposite of yields or interest. You can see a 1, 2, 3 down here, and it's got even further to go. So that's not done yet. Let me look at another one of these on bonds. Here you can see that rate of increase from the March 2020 low. You can see a 1 up, a 2 down. There's 3 up. We have a 200% rise in less than a year. 3 equaled 1 at 2.27%. In February, we had a 2.40%. Just a few days ago, we had a 2.51%. We have a target price where 3 equals 1.618 at just under 3%. That's causing a problem for the markets. Let me see if we have something else on bonds. We've got that. We've got this. Oh, that's where I showed you guys, even if the 39-year bear market is not complete, with a 95% retracement or 95% decline to the 0.884% low, we can still expect to see rates move up to these 6, 8, and 9% level before the downtrend continues and goes negative, which I don't believe is going to happen. Nobody knows, but we will see what happens. I think that might be all in the interest rates. There we've got gold, and we did the rest on the S&P. So here's the big picture we're looking at. The market came within 1.5 points of ideal perfection of hitting our long-standing target of 39.96. We expect that to hold. Alternate count to 41.36. Otherwise, the decline begins, and we could be not only retracing this last 5 waves, but much larger degree of trend. We'll get into that once the decline is underway in earnest. Okay, that will do it for today. And until next time, take care, everyone.